This is the briefing for Monday, June 19th. The markets were closed today for celebration of Juneteenth, but I had to travel last week and I did not get to do any briefings as a result of that because I didn't have my full charts with me or I was able to make a recording. So I thought that I would kind of catch things up in today, even though the market was closed for the most part. If we look at where we are in terms of price development and price structure, it's very interesting because I think we're seeing some pretty good divergences that are existing between those. And I want to start with the longer term charts. These are going to be weekly charts of the spiders, the Qs, the IWM. And as you can see, the spiders have broken out from a longer term rotational pattern, and you can see that right through here. Now, this is about the 430 area in terms of the spiders. You can see that we broke out last week and had a little bit of a sell-off coming into the end of the week. But so now support is actually at the 430 level. Now, I should also say that because I'm looking at weekly charts, the really important short-term resistance and support levels are basically the previous day's high and or the previous day's low. But when we look at where we are in terms of this, in terms of the weekly report, certainly the weekly highs and lows are intermediate term support and resistance, and then we have longer term important support and resistance levels as well. And as you'll see that the longer the term of support or resistance, the more important it is. So 430 being the low of last week and the support for this longer term area of rotation is just going to be very important. Below that's going to be the 418 to 420 area. Now to the upside, we're looking really around 460. So it looks like we closed on Friday right around 439.46. That would then suggest that trading above Friday's high would then suggest the potential to trade above the 460 level, or I should say at least up to the 460 level. Now, you can see we had a little bit of a tick up in volume in terms of the spiders, but really the important aspect here is what's happening in terms of market breadth. Look what happened between the last 2 weeks, between the test of the 430 area, which we got 3 weeks ago, I should say. And then, of course, last week or 2 weeks ago, we had this divergence that came in. And then, of course, breadth was flat even as we broke out of this 430 level in the spiders. 52-week highs minus 52-week lows is improving. So we have really some misdirection or miscommunication between the internals. And I'll get to more of that in just a minute. Now, this is the Qs for the NASDAQ. Look at this 340 level breaking out. This was 4 weeks ago, and you can see the breakout. You can see that the next week we had a little bit of an increase in market breadth, but then for the last 3 weeks we've seen market breadth decline pretty significantly. A little bit of a tick up last week, but still this is a pretty good intermarket, or I should say internal divergence that is pretty important. I think could have some impact on what's happening with the indices in the coming week. Now, also you can see we had a little bit of a tick up in the Qs, so volume is beginning to support what's happening in terms of the indices themselves. Now, the Russell certainly is lagging. Now, the Russell was locked in this rotational pattern that was part of a much greater degree rotational pattern that you can see there. And 2 weeks ago, we broke out to the upside. Volume increased, volume fell off last week in the IWM, and breadth in the IWM certainly is not supporting this move either. This 190 level in the IWM is certainly resistance, and you can see we touched that last week and then had somewhat of a sell-off going into the end of the week as well. So what we have here we have price development that appears to be wanting to move higher. We have market breadth that's diverging pretty dramatically. We have volume that is increasing slightly in the in the ETFs specifically themselves. And then we have a situation where we are, at least at this point, basically neutral in terms of overbought and oversold condition of the market. Looking at total volume, last week Friday was option expiration week, and you can see when we get those, we get huge volumes on those Fridays. This was Friday's volume here. We have to basically eliminate that and go back to the day before, which was right there. So you can see that basically total volume in the NYSE is flat, and we have basically the same thing for the NASDAQ. NASDAQ volume exploded on Friday, basically as a result of option expiration. But then, of course, if you go back to Thursday, we're basically still in this area of greater degree rotational pattern in terms of volume itself. Looking at where we are in terms of the 50-day percentage of stocks above the 50-day moving average and 200-day moving average, that still is supporting where we are, but it may be somewhat of a lagging indicator as we have paused. Basically, you can see the pause here for 2 days of trading, but it expanded nicely on this move here. So while we had a broad base of stocks that began trading above their 50-day and 200-day moving average, and the same thing with the 200-day moving average. So this is basically supporting what we're looking at in terms of the breakout in the indices. Now, keep in mind there's an intermarket divergence between the Russell, which has not caught up and is not breaking out in terms of the other indices, and the spiders and the Qs that have broken out to the upside above their recent resistance levels. Now, also, if we look at where we are, I want to look at the Dow Industrials and Dow Transports. This is the industrials, and you can see this rotational pattern we've been in for quite a long time now. On Friday, we tested the 34,630 level right here in the industrials, and then of course we have a confirmation of that has basically test of the 14,792 area in the transport. So basically, this pattern is confirming the same pattern with the industrials. Divergence right here, as you can see, between the transports and the industrials, but that led to this move to the downside for both of the indices. So really no real help in terms of looking at where we are in terms of those divergences, but the spiders and the Qs are breaking out. They want to go higher. The IWM is not. Breadth is not confirming the move. Volume, I would say, is really not very well in terms of increasing to support price, but we do have a slight increase. Now, looking at the NASDAQ 50-day moving average and 200-day moving average, you can see that it's pretty good here as well. So the percentage of these stocks trading above their 50 and 200-day moving averages is certainly positive, and the same thing with the Russell. You can see the pause even through here, pause even through here in terms of what's happening. Pause in terms of price development, pause in terms of price development. In terms of the Qs going back to them, you can see we had a little bit of a sell-off, trading a little slightly higher on Friday's trading, but then closing a little bit lower. Same thing with the 200-day moving average. So basically what I would say for tomorrow, Tuesday, in terms of trading is to watch what happens between Friday's high and low, and that's going to give us the next indication of where we are. I think this is Friday's high, this would be Friday's low, and the same thing in terms of the Qs. This is Friday's high, this is Friday's low, and the same thing with the Russell. Looking at Friday's high and then Friday's low would be right here. As if those are broken, then that would suggest, if we go back to the longer term charts, because we've broken out on a daily basis as well. Let me just switch this to a daily chart. You can see we've broken out on a daily basis as well. So looking at this 335, 340 area is going to be the next level of support. Although we've got really a little bit of a rotational pattern right through here. So it could be that right around the 358 level might be the next level of support for the spiders as well. You can see going into the end of the week, volume increasing pretty nicely on the NASDAQ and in the spiders. Let me change this to a daily chart. You can see the same thing, breaking out at the 430 level, volume increasing on the breakout, breadth decreasing on the breakout. And in terms of the Russell daily chart, you can see the pause right through here. This is the breakout of this area of rotation. 190 is resistance. I gotta say that if the Russell breaks out above 190 and confirms what's happening with the spiders and the Qs, then that's probably a pretty good signal that we're going higher. Volume increasing, but red. Look at this this divergence in market breadth. That's the only concern I have about throwing the kitchen sink at being long, at least for right now. Now we did survive last week the announcement of the CPI and core PPI, but we also survived the Fed's announcement on interest rates as they paused for June. So it's going to be interesting. I really thought a pause would bring much more price development into the indices themselves, but it did not. So I think traders are basically standing back and they're really unsure whether value is going to be higher or lower. But we have to take our cues from support and resistance, short term, intermediate term, and longer term, and then watch what happens on any breakout to the market internals. Especially if we break out higher tomorrow, we need to see breadth increasing to support what's happening in terms of price development. Have a great night, and I'll pick this back up tomorrow after the close.